Welcome back. Time now for On the Radar, and we're back with Tyler Mordy, CEO and CIO at Forstrong Global, to go through some of your picks. So, Tyler, we'll start with the first one, Global X Copper Miners ETF. Now, we were talking a little bit about ETFs in gold and copper earlier. What is it you like about this one?
Just broadly, we love the commodity complex. And if you think about the big commodity stories over the last, and I'm going back 50 years, we had a commodity bull market from 1968 to 1980. We had a commodity bull market from 2001, 2002 to 2012. And the makings of a good commodity bull market are always a lack of supply, right? You get a rising price, you get a lack of supply, and then you get the actual companies investing in CapEx and that type of thing. So the copper story is at the heart of electrification. It's at the heart of decarbonization. It's at the heart of reindustrialization. Right now, everybody knows, the world is fragmenting. Yeah. And so everybody's retreating to their own industrial strategy, recreating supply chains, all this type of stuff. So the copper miner ETF is supplies exposure to the world's leading copper majors. So a lot of it's in Canada, about 34% in Canada. Wow. But then it goes right across. There's some in the United States, there's some in emerging markets, there's some in Asia and so forth. So it's an ETF with good leverage to the copper price. And so we bought this for clients late last year. And obviously it's done very well, but I think it's a multi-year story. Right?
And copper, we're seeing the price down a little bit right now, but obviously, with the lack of supply and the demand that we're going to see for copper increasing, you feel like the copper prices are going to be strong.
There hasn't been a commodity story in a very, very long time, right? There hasn't been, think about all the CapEx. I think about the oil sector, for example. In 2012, there was $1 trillion spent in oil CapEx. That obviously is not the case for oil, but it's not the case for copper. It's not the case for gold. It's not the case for anything really in the periodic table, right?
Right.
So I think it's good leverage, and it's got all these sort of macro tailwinds for a very long time. And it's largely, everybody's been, back to our earlier comments, everybody's really been obsessed with the Mag 7 technology, that type of thing. And so we call this sort of the revenge of the real economy. The real economy is coming back, and people are taking notice of this.
Interesting. All right, your next one, iShares Europe Financials ETF. What is it about this one
that
you like?
So this is, as we talked about, Europe is in a classical cyclical recovery, right? All the makings of what you would want. So the Europe Financials iShares ETF supplies exposure to Europe's largest banks. It's market cap weighted. And, if you look at the European financial sector right now, and you look back what it went through over the last decade, everybody knew about the Eurozone sovereign debt crisis in 2012 and 2013. Europe deleveraged very hard after the global financial crisis in 2008. Yeah. And it was a terrible place to be, the European banking sector. Now what we're seeing is the return on equity is actually higher in European banks versus the US banks. We're seeing the shareholder yield, which is the combination of the dividend yield and the stock buybacks, is better than US financial services as well. And investors have taken notice, right? It's done incredibly well the last few years here. So we've held that for clients, and it's been a good place to be.
So we've talked about commodities, we've talked about Europe. You're very organized because your last ETF goes over China and the Chinese market, right?
We move it right across the world, right? Yeah, exactly.
Yeah.
Exactly.
So the Crane Shares CSI China Internet ETF.
Yeah. So we talked a little bit about this, but this one supplies exposure to the major consumer internet companies in China. And as I mentioned earlier, it's sort of, think about the companies like Facebook, Twitter, Google, et cetera, that are in the American index. And if you want leverage to the Chinese middle class, which is rising and which has been rising for a very long time, then these companies are well positioned. And I think the most interesting thing is, they're, as we talked about earlier in the show, they're integrating AI into their business models as well. Yeah. But you can buy these things at a fraction of the price. Like the trailing PE, price earnings ratio, over the last year is about 17. If you look at the Mag 7, you strip out Tesla, it's about 34. So you're getting about 50% off discount on these companies that effectively do the same thing for a different population.
These are the almost kind of Asian equivalent of the Mag 7 is what you're talking about.
Exactly.